Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, it appears as though Urban Outfitters is going to be offering their customers a little bit more than 90s style clothing in their shopping aisles. It seems like customers may be getting the sweet smell of pizza when they walk into their stores. Tracey, Ryniec, and Dave Bartosiak here to talk with me about the Urban Outfitters' recent acquisition of a Pennsylvania-based pizza chain. Tracey, this is a bit of a real head-scratcher for a lot of investors and shareholders here. Less than $20 million spent by Urban Outfitters, according to the story, to acquire the Vetri pizza restaurants owned by celebrity chef Mark Vetri. And a couple of other of his restaurants go into the deal as well. What does this say about the core business of Urban Outfitters?
Well, at first, when I heard this headline, I thought maybe it was an Onion headline or something like that, because it seemed weird. But stepping back, they've already entered into a partnership before this deal with Vetri to open up these pizza restaurants near their other restaurants, say in Austin, where they're opening up a new lifestyle center. So they were already going to be his landlord. So after, a couple months of dealing with him and his group, they basically came to the conclusion of, we like you so much and you fit within our brand model that we can take your business and expand it to many other locations. So it's not really going to be in the Urban Outfitters or the Anthropologie store, but somewhere nearby as a standalone. And I was a little concerned that maybe they would try to run this restaurant chain because they have no experience running restaurants. But they're keeping the original management on board, so they'll be running it. And Urban Outfitters can keep focusing maybe on its actual retail business.
Well, I need to ask you, as a strategist, as somebody who analyzes these situations on a day-to-day basis, how are you viewing this? Are you viewing this as, well, we're just going to diversify our business portfolio, or a real dilution of the core product?
I feel like it's a way that they're trying to get people into the stores. I used to love Anthropologie stores, and I always thought someone should make a blog that was titled, I want to live in an Anthropologie store, because you had real feeling whenever you went in there. There's a certain way they style them. People collect the Anthropologie catalogs because they're so stylized, but they seem to have lost a little bit of that mojo, but this kind of restaurant concept brings that back in, so instead of living there, now I can eat near there, and I have the whole same feeling and emotions that I might have had when I was going into the store prior. And it's not that strange, because we've seen some of this with some other major retailers, like Restoration Hardware is now opening up these huge gallery stores where they are now incorporating food concepts in there as well. And no one made fun of them, but I think it was just because it was kind of announced on the same day as their earnings, which weren't that great. Their same-store sales.
It's kind of curious.
Yeah, so that deflected from the underlying problems in the retail area, which is that their Anthro brand is struggling still. It's struggled several quarters here. And Free People used to be their big powerhouse brand, but even the same-store sales in that brand were much lower than I've seen recently. So, and then Urban, it's kind of flat, not that bad, but even the CEO is saying maybe they might be off track a little bit with their trends at the Urban store. So none of that sounds good. I brought along a chart of what the earnings estimates look like, because this is still really what we need to be talking about. And you can see the analysts have been cutting estimates for this year and for next year, so it is trending down. It's a Zacks number 4, but still got earnings growth. It's supposed to grow 8% this year and another 17% next year. So some parts of the business aren't bad. And, Dave's going to talk about the chart here.
Right. And so on that note, we'll bring Dave in.
I can't even go there yet,
he disagrees.
First, we got to talk about the pie chart, right? The pizza pie chart. Are you in the Anthropologie and going, you know what? I could really use a slice of pepperoni
Maybe next door. You might want to go next door,
That's going to put you over the edge.
Look, at the reports I've seen, you've probably seen the same reports, shows the stock down 50% since March of 2015, and down even further after the news was released. So I guess initially, at least, it doesn't look good to investors.
No, it doesn't. It hasn't, and I don't know if it will. Strictly from the chart's perspective, it's kind of like You buy this. The only reason why you would buy this stock is that you're hoping that you caught the bottom and it's finally going to bounce, right? Which is a very risky trade in and of itself. I like to buy into strength. I like to buy, Zacks ranked number 1 and number 2s, and with some momentum behind them in the positive direction. This is the exact opposite. This is a stock that has been falling, that on every metric that I could put up here, it's oversold. There's a strong downward trend. It's below the 21-day moving average, the 50-day, the 200-day, the insert number of days here.
So it doesn't represent a buying opportunity at any level to you at this point?
So on kind of your realm of possibilities, right?
Yeah.
There's a snowball's chance, right, that this is the bottom and it's bouncing. All the other technicals are very, very negative.
And there's that small slice of the pie you were talking about.
That small, it's the snowball, the snowball pizza,
Yeah.
right? So if you could buy that piece of the pie, I don't know. I like the idea of this sort of renaissance in retail, because the only way that you're going to get people to walk into the brick and mortar location is you got to offer some sort of experience that's way cooler than what you're going to get, going online and buying something. So I like the idea that they're trying to differentiate and say, okay, well, we've got kind of this pizza thing, but they're not even putting it in the stores, right? So it's like, oh, go around the corner, we own that too. So it seems like more of a play for Urban Outfitters to kind of make some money somewhere, right? And move in a positive direction. And I guess they need a pizza company from Pennsylvania to tell them how to make money, because they haven't been figuring out how to do it on their own.
All right. Well, thank you both.
And Pennsylvania's not exactly a hotbed for pizza anyway. Everybody knows Chicago's got the best pizza.
I do have to say, as the value investor, I do see some value here.
Okay.
And so I don't think all is doom and gloom. It is a 4, so I wouldn't be buying it here because that's the sell. I would wait until things shake out a little bit, but it's trading only a little bit over 11 times. That's pretty cheap. It could go cheaper, as Dave said, but I don't hate it as a value play.
So you think there might be some life here down the road for investors, that it's worth a look.
Yeah.
At least. All right. Well, thank you both for that. I guess you could say Urban Outfitters trying to raise more dough with pizza. Thank you for joining us in between these segments. Don't forget, you can always find more stock commentary on our website, Zacks.com, if you're not there already watching this video. And if you're watching this video on the YouTube platform, don't forget, you can subscribe to them there and even comment on them. Feedback's always welcome. With Tracey and Dave, I'm Terry Ruffalo.